Joining me now, first on Fox Business, is one of the nation's top energy experts, Lipow Oil Associates President Andy Lipow, who is here to tell us, Andy, that it's going to be a lot longer before things return to normal?
Well, thanks again for having me, Liz. Yeah, that's exactly right. It's going to be quite some time before things return to some semblance of normal. When we think about a number of steps that have to be taken, we need the mine sweepers to remove the mines to create a safe vessel lane for the passage of these ships. In addition, we're going to have a traffic jam of ships, from those 500 ships that are trying to get out of the Persian Gulf to numerous others trying to get into the Persian Gulf to load that oil that has been stored onshore in Saudi Arabia, Kuwait, and Iraq. And once that oil starts moving, those countries will be able to start increasing their production.
How many months before it comes back to normal, Andy? Give us the straight talk.
Well, what I'm going to tell you is that to get to about 75 to 80% of normal is going to take 3 to 4 months. Keep in mind, we've talked about oil quite a bit, but those Qatari LNG facilities were significantly damaged. And to fix those and get those repairs in place, that we're talking 3 to 5 years. But for the oil market, we're looking at much healthier supplies if this agreement holds over the next 6 months.
There needs to be a lot of purchase, and it's pent up, of oil right now. And it's not just Europe. I mean, Europe is really stretching. They are waiting for more inventory. It was interesting to see you had both the Kospi in South Korea and the Nikkei in Japan jumping pretty significantly today, because those are countries that rely heavily on imports. We need oil. We don't need to import oil because we are the biggest producer, but we need it to fill our strategic petroleum reserve. And news came out today that that sort of dry powder that we always hope to have in case of real emergencies, the strategic petroleum reserve now, Andy, is at a 43-year low. Don't we need to start filling that back up again, and fast?
Well, we do, but one of the things that the administration did do is when they released this oil, they did it on an exchange. So they were giving the market oil now in return for oil over the next 2.5 years. And in fact, for the 133 million barrels that have already been released, we're going to get 20% more, or another 25 million barrels back as a premium into the reserve. Now, unfortunately, because this filling takes place in the future, we really have depleted the cushion for, say, a major hurricane event in this coming summer that takes out Gulf of Mexico production.
So what's the trade here? We've got an investor audience. Do they buy the tankers, or do the tanker prices go down now that there's a movement through the strait? Or there will be?
Well, I think that, buying the tankers is probably a good thing, because not only have a lot of tankers been idled, but a lot of that shadow fleet, has been taken out of service. So we're going to see a shift to more tankers that are outside of that sanctioned group of folks. And not only that, there is going to be pent-up demand in the near term to move the oil coming out of the Middle East to whether it's markets in Asia or into Northwest Europe, and consequent to that, to move the refined products around the world to the markets that need them.
Okay, we literally have 10 seconds. Really quick, Andy, how long does it take to get back to $3.13 average for a gallon of gasoline in the U.S.?
Well, unfortunately, you're looking at a couple of years, because simply put, there's new geopolitical risk premium in the price of oil, and it's going to take us a long time to get back to in the mid-70s or even below $70 a barrel.
Andy Lipow, first on Fox Business. You get it right here. Thank you so much for joining us.
Thanks for having me, Liz.